What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So, pretty treacherous week in markets and one of the worst close to the month of April since 2020. From a fun fact perspective, the last time the SP 500 year-to-date performance was this bad was during World War II. Of course, the reason is always the same. The two big themes right now are inflation and the fear of a recession, with the Fed hammer dropping next week. Will it be the 0.50 percentage point increase or an even higher number? We'll find out on Wednesday, May 4th, so brace yourself for another rocky week. Either way, I stand by my call that historically market conditions have been much tighter than the current environment, and the stock market thrived nonetheless. The adjustment process is going to be painful to go through, no doubt about that, but it does get better on the other side heading into Q3, Q4 if you manage to hold through it. So for today, rather than dwelling on the equity markets, I thought I'd share with you some of the details around the case for the $1 million Bitcoin. I know that sounds crazy, but once I saw the breakdown, it became a lot more believable. Full disclosure, this isn't my research, but rather what Yasin Almandra at Ark Invest put together with their Big Ideas 2022 report. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. That said, I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Well then, the report is pretty extensive and covers a range of topics from AIs to EVs, gene editing, and of course what I'll focus on today, Bitcoin. For a while now, I've been making the case to you that TradFi and DeFi will continue to intersect and become further entangled and interoperable. The main reason being that traditional finance, or TradFi, has come to fully realize the benefits that DeFi offers, and more importantly, regulatory clarity is increasing. This allows more banks and financial institutions to enter the space in a more meaningful way. Just this week, banking giant Goldman Sachs issued its very first Bitcoin-backed loan to a customer. In exchange for putting up Bitcoin as collateral, this customer was able to obtain a fiat loan and purchase a home. Main benefit here is that the customer in question avoided a tax hit that would have come otherwise from selling their Bitcoin to raise the 500K amount. Benefit to the bank is that they are guaranteed their money back, right? As they can simply liquidate the Bitcoin position if the customer doesn't pay back the loan. Pretty straightforward. In the end, the reason why financial institutions are integrating with public blockchains like Bitcoin is so that they do not lose too much business to newcomers and go obsolete themselves. So at a high level, as you think about the current state of how things work, consumers work with credit card companies like Visa to facilitate transactions, banks like JP Morgan or Goldman Sachs to borrow, hold, manage, and/or invest their assets, while the federal bank dictates monetary policy. The Fed can print more money out of thin air if needed and are in charge of fighting inflation by modulating interest rates, right? It's pretty straightforward. The Bitcoin network does all that and doesn't require you to have a certain credit score or be in a certain geography to be able to participate. The only requirement is that you have the internet and either a desktop or mobile smartphone. According to Yasin's research, in the same way that we once believed that the internet was going to be its own little vertical off to the side, but ended up integrating with all previous communication channels like TV, radio, and expanded to how we even do business with e-commerce, Ark believes that crypto assets issued on public blockchains are likely to impact all asset class and will likely turn all assets into on-chain transactions. With the advent of blockchain, three main revolutions are occurring: the money revolution, the financial revolution, and of course, the internet revolution. As we move away from the status quo, which is highly centralized with the power and control in the hands of corporations and government, you can see where the Ethereum and Bitcoin network fit in the equation. The idea being that with a limited and immutable supply of 21 million Bitcoin, the concern around inflation becomes non-existent. Because the system is rule-based, it makes it predictable, resilient to unwanted change, optimized for security. Bitcoin has never been hacked, by the way, and as a public ledger is transparent and open to everyone to see all the transactions ever performed. I think that sets the stage quite nicely and also explains a bit of the background as to why so many people believe so strongly in Bitcoin long-term potential. But to understand where we're going, we need to take a quick step back and look at how we got here in the first place. 2021 was a roller coaster of a year for the Bitcoin price, and this chart here does a great job at capturing the various events and how they impacted the market capitalization of Bitcoin. Bitcoin first crossed the $1 trillion market cap after Tesla converted 8% of the cash on its balance sheet to Bitcoin. The influx of capital from the first spot ETF approved in Canada pushed us to all-time high. Between Tesla backtracking on allowing Bitcoin for payments and the Chinese ban, we dropped below the $1 trillion mark again. And El Salvador accepting Bitcoin as legal tender and the SEC approving futures ETF in the US brought us back over that level. Since then, we've corrected further. Currently, the Bitcoin market cap is right around the $750 billion, with 19 million of the 21 million total supply mined. So the main question, of course, is how do we get from where we are now to the $1 million per coin? So as it stands, despite all the talk of Bitcoin being adopted around the globe, understand that only 8%, right? 8% of the total Bitcoin supply is held between exchange-traded products, countries, public and private companies. You can see the percentage breakdown in this table here. Also, even though MicroStrategy is always making the news for buying more Bitcoin, Grayscale actually holds the top spot for most Bitcoin held. And so to get a real sense of where Bitcoin is as an asset class, we need to compare it on a global scale, right, to the other asset classes that came before it. Global real estate is worth $220 trillion, right? The global bond market is worth $124 trillion. The global M2 market is worth $123 trillion. And for the record, global M2 is the total money supply held in cash, checking accounts, savings accounts, and other highly liquid assets like money market accounts. Global equity, that's basically the stock market, is worth $106 trillion. Gold is at 10 trillion, and Bitcoin, which is often referred to as digital gold, at its peak, right, was only worth $1.1 trillion. The interesting thing is that Ark Invest theorizes that the Bitcoin market cap could 25x between now and 2030 to reach or exceed the $1 million mark. And for that to happen, it doesn't even actually need to take over the entire world or be the only monetary system in existence. In fact, it doesn't even need to be the dominant one. That's the crazy part, right? And so here's how it breaks down. Achieving true digital gold status with 50% of gold's total market cap, that would be worth $260K. Having every company in the S&P 500 convert 5% of their cash on the balance sheet to Bitcoin would add another $200K. Institutional investors like BlackRock or Fidelity allocating 2.55% of assets under management would add $196K. The next category for HNWY or high net worth individuals, that would be your billionaires of the world, right? And if they move 5% of their wealth into Bitcoin, that adds $190K. Nation states or countries around the world converting 1% only of their treasury adds $181K. 25% of all US bank settlement transactions on chain, that would add another $181K. If 10% of the M2 global supply is converted over, that's another $133K. And finally, the remittance market, which was a big reason for El Salvador to make the switch. If Bitcoin can capture 50% of that market, it would add another $14K. When you put it all together, right, it brings the price to Bitcoin to a mind-blowing $1.36 million per coin. Now, do I believe that it plays out exactly like that by 2030? I would say no. That said, do I believe that Bitcoin will more than likely, at a minimum, 10x from here and could be worth $500,000 by 2030? I would say absolutely yes. And beyond 2030, I wouldn't be surprised to eventually see Bitcoin reach the $1 million mark for all those reasons, especially because there is signs everywhere that adoption is growing, with more countries realizing the benefits that it offers for combating inflation, for example. People are increasingly seeing it as a safe haven to preserve their wealth, and as more regulatory clarity is provided, Bitcoin, along with other blockchain networks, will find their way into every aspect of what we do. But probably the most important reason is its scarcity and the increasing demand. The actual available supply of Bitcoin is lower than 21 million. In fact, it is estimated that 3.7 million Bitcoins have been lost forever since the early days due to people either losing their physical hardware wallet or their digital keys. And if we want to simplify this even further, and this will be the last point I'll make, the US alone counts 332 million people. If just 10% of the population wanted to buy one Bitcoin, they simply would not be able to. The reason, there's just not enough to go around. Now, take that and blow it up to global scale, right? You see my point. So looking at it through that lens, Bitcoin is currently extremely undervalued. And if you believe that blockchain technology will play an integral role in the future, then owning at least one Bitcoin should be a goal. Personally, I believe that will be the case, and that's why that is a goal of mine. And on that note, I'll leave it here for today. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday and as time allows here and there during the week. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.